I got something for you to think about. If your house catches on fire, would you go next door to your neighbors and file with their insurance company for coverage? You wouldn't. That would be ridiculous. Now imagine being forced to buy insurance that doesn't even cover your property. Well, that's exactly what happens every time you buy automobile liability insurance in America. Auto insurance, and mainly liability, is one of the biggest consumer scams to ever hit the pocketbooks of Americans. You know, it's sold as protection, but liability coverage, the one you're legally required to have, doesn't cover you at all. It's designed to protect everyone else from you. And every time you drive, you're betting on the probability that everyone else has liability too. Like you can get even 10 people to do the same thing at any point. This is a screwed up game, and the more you dig, the uglier it gets. Discriminatory pricing, misleading terms, and the deceptive idea of what coverage even means. By the end of this video, you'll see how insurance companies have been playing Americans for decades, and why the system is designed to keep you paying forever. Liability insurance is legally mandated in every state except New Hampshire and Virginia. How did that happen? We didn't vote on it, so who forced that issue? I think it's a textbook example of corporate America influencing government, the power of lobbying, and big money politics. But liability doesn't cover your car. It only pays out if you damage someone else's property or cause injury. But what about you if they're not covered? For more than a few, this has been the case. They followed the law and in the end got screwed by a system that's purposely been set up backwards. This means I buy insurance to protect you from me? What? Let's think about it this way. If your house burns down, you file with your own homeowner's insurance, not somebody else's. But if you get into a car accident, liability insurance won't cover your vehicle. You file with the other person's insurance. And if they don't have insurance, and you haven't paid the extra for the a la carte choice of uninsured motorists, you're left holding the bag. Nice. And that's just the first layer of this mandated garbage. Okay, I love this part. You're not allowed to opt out. The government forces you to buy insurance coverage that doesn't actually protect what it's supposed to cover. This is the only situation where you buy insurance to protect everybody else, not you. There's something just wrong with that, but here's the reason why. The average auto insurance premium in the U.S. is about $2,014 as of 2023. Or about $167.84 a month. That's more than double the average from just 20 years ago. And these companies aren't just basing your rate on your driving record. They're using algorithms that factor in things like your age, gender, zip code, and even credit score. They use this information to feed the profit machine. So two people with the same car, same driving record, but living on opposite sides of town might pay very different premiums. One gets punished simply for living in the wrong neighborhood. This isn't just unfair, it's legal discrimination, dressed up as risk assessment. By the way, insurance companies have the coolest terms ever produced by corporate America. Let's talk about the big lie, full coverage. You know, years ago, full coverage meant you were covered, period. Today, it's an a la carte menu of add-ons: collision, comprehensive, uninsured motorist, rental reimbursement, roadside assistance, the works. Like ordering at a restaurant, except most people don't understand the terminology, at least not completely. The Bernetti legal brochure found that the term full coverage is so misleading that it led regulators in multiple states to issue warnings to consumers. In reality, full coverage varies by company, and there's no such thing as a universal definition. Well, let's try this definition. According to Webster, full is defined by complete, especially in detail, number, or duration. And coverage means something that covers. Seems pretty clear to me, but corporations create their own definitions for common words. They expect us to see them as their true definitions, not the corporate meanings. One Texas driver, Kirk Hogg, told consumer advocates he thought full coverage meant he was safe in any situation, until he was hit by an uninsured motorist. The insurer told him uninsured motorist coverage was extra. His so-called full coverage covered nothing. Another driver was rear-ended by a teen that was learning to drive. Even though the teen had a learner's permit and the owner of the vehicle had liability, the insurance company denied coverage because the teen wasn't listed as an authorized driver. The lady that got hit had to live with the damage done to her brand new pickup truck. So what exactly are we paying for? And where is all this money going? The U.S. auto insurance industry rakes in over $350 billion in premiums every year. Meanwhile, the CEOs of the top 5 auto insurers each make between $10 and $20 million annually. I bet they don't have a problem paying their premiums. And despite charging record high premiums, many companies fight tooth and nail to attempt to deny claims. It's the only business where they win twice. First, by collecting your premium under a legal mandate, and then by denying or limiting your payout on your claim. The system has become so convoluted and complicated that even the insurance agents don't really understand the specifics. These corporations have created a monstrous flowchart of if-then scenarios that can only be navigated by supercomputers using algorithms based on national averages and payout cost, not on what specifically happens in your case and how it affects your life. The human element has been removed to maximize profits, and the law mandating it is there to keep you trapped in the cycle. Behind all the numbers are real people that suffer. People who lose cars in accidents and can't get to work. Some people lose everything just due to a simple accident. It's a real crappy situation and a slap in the face to Americans. I just don't understand how we continue to allow stuff like this to happen. According to consumer watchdog groups, nearly 1 in 7 drivers in the U.S. is uninsured because premiums are just unaffordable. There are many cases where the insurance premiums are actually higher than the automobile payments they're supposed to protect. In a world where people are barely able to survive, it won't be long till that number's 2 in 7. That means that even if you play by the rules, there's a decent chance the person who hits you isn't covered at all. And if they're not, you're not. So if the system doesn't protect you, and it doesn't protect them, then who does it protect? I think that answer is pretty obvious. It looks like it's the insurance companies themselves. So how do you fix a system that's designed in such a way? How do we ensure that it gets better and not worse? We redefine minimum insurance to actually protect the policyholder, not the other guy. We ban discriminatory pricing models that punish people for their zip code or credit score, and require insurers to clearly define terminologies such as full coverage, no more smoke and mirrors. And we should hold companies accountable for claim denials with penalties that actually hurt. Let's face it, auto insurance isn't about protection, it's about profit. You're forced to buy it, and it doesn't always protect your car. It doesn't protect your wallet, and it doesn't protect your future. The system is broken by design, and until we demand real change, Americans are just going to keep paying billions into a rigged game. So I'll leave you with this. The next time you pay your insurance premium, ask yourself, are you being covered or are you being conned? Stay curious and stay free.